All right, trade pros, good morning, everybody. Welcome to our morning market update for Monday, November the 5th. Holy smokes, time is flying. And we got a great morning market update for you here planned today. We're going to talk about a lot of stuff. Iran sanctions. We're also going to talk about the upcoming economic calendar for the week and where you should be paying your attention to. We're going to talk about tomorrow's midterm elections. There's just a lot that we're going to talk about. I'm just updating my notes. All right, so let's start out by first and foremost going through and doing a little bit of a roundabout through the markets around the globe. So in Asia, Japan's down 1.6%, Hong Kong's down 2 whole percentage points, China's down 4/10, and India's down 0.2%. So Asian markets have experienced selling in the first session of the week here in the markets. All right, in Europe at midday, London's up 0.3%, Paris is up 0.2%, Frankfurt's up 0.3%. So all in all, you got modest gains in Europe, but we started off on the sell side in the Asian session. And in the United States, all markets are more or less flat. We're seeing a little bit of a bid early on in the morning. This bull market, however, is in the late stages of where of its life, really. It's 9 years, 7 months, and 4 weeks into this bull market since we bottomed out from the financial housing collapse. We've seen a lot of upside in this market. The pullback so far that we've gotten, yes, it's significant for traders who haven't experienced downside, and it could just be starting. All right, the question here is, do we enter into bear market territory? Bear market territory is a 20% drop or more in equities. Right now, we've seen the 10% marker be hit, and we've rallied off of it significantly in the U.S. We got some major political events this week and a Federal Reserve meeting minutes. We got a lot of data that could influence the market that's not predictable. Nobody can tell you who's going to win or what's going to happen in the elections tomorrow. So let's cover the elections very quickly. Tomorrow, we're going to talk about the morning market update, the more details about the 3 scenarios of the elections and what could drive the market. But the most important thing you got to know is tomorrow's got the opportunity to have a lot of volatility, right? So if you're long stock and if you have a portfolio, understand that you have a choice here. You either sit through the volatility and hold for the long term, or you do something and take action to protect yourself against an adverse pullback or some downside momentum. In 2016, when Donald Trump was elected, we had a 5% sell-off, followed by a 6.5% rally off those lows to pretty much close off that entire gap overnight. Huge trading opportunity. I did the math. If you just put $500 of margin into one contract and captured just half of that move, it would have been $5,000. All right, so you're going to get a lot of potential, a lot of market movement tomorrow, and it's not really something you could predict. Any poll, any person out there that's telling you they know the outcome already is lying to you in your face, and that's not nice. Might as well be slapping you too, because nobody knows. I'll tell you the truth. No trader out there knows what's going to happen. I will tell you this as well. Every trader will be around to take advantage of what happens. If you're a trader in Europe, if you're a trader in Asia, all right, New Zealand, any continent across the world, you're going to be at your monitor tomorrow. All right. Trading desks around the world will be open. Doesn't matter if it's 3 a.m., 1 p.m., whatever the time zone is, they'll be trading to reprice this information in. A lot of volatility expected tomorrow. We're going to be trading together live in a room with our elite team. We're starting at 7 p.m. Eastern, and we're going to go till 1 a.m., 2 a.m., 3 a.m., whatever it takes in order to capitalize on this opportunity. So we got a marathon tomorrow for you guys. I've told the wife, honey, tomorrow, let the pillow be me because I may not be there. That's not what I told her, but now that I say that, that's a good one. I'm going to tell her that tonight. Maybe I'll be sleeping here longer hours after the election. All right, so equity markets are going to be severely or heavily impacted by this. I'll tell you the different options of what's likely to happen, and then tomorrow, and then you kind of forget about that. Have that in the back of your mind, but trade. I said this to the subscription team last night. We did a webinar in preparation for this week. Every Sunday at 8 p.m. we do a live webinar with all our subscribers, and I said the following: don't let your political ambitions and views cloud or judge your investment dollars. All right, your money has no prejudice. Your money has no bias. It has no opinion. It just wants to be made into more money. It just wants to multiply. All right, that's the goal of your capital. And if you direct that capital behind your political bias, all right, that's going to be very dangerous for you, because you're looking for self-satisfaction, self-fulfillment, and your capital doesn't care about that. So you're really limiting yourself and exposing yourself to disaster. So if you're very politically tied to this event and you have very strong emotions that you can't separate, do not sit down at the market tomorrow. It'll bloody you up. All right, we'll talk about risk management and discipline and how to control yourself tomorrow morning. Today, let's keep going. Crude oil is down 0.6%. Gold's flat. Bitcoin's also flat at 6,400, kind of sitting in the range. On the news docket, we got PMI Services Index at 9:45. 10 a.m. we have ISM Non-Manufacturing Index. Then at 1 p.m. we have 37 billion 3-year note auction out of the United States. And by the way, Treasury sales in the United States have experienced a slowdown, less demand by the Asian countries, and that's no surprise. All right, you export less, you make less money, you have less dollars in U.S. as exchange, less money to buy treasuries. Right? So that's not a shock. This week, look for trade war escalations and updates. As of today, Iran sanctions are officially in. We're going to talk about that in one moment. For the rest of the week, you don't really have much today other than the ISM non-manufacturing. Tomorrow, you have the congressional elections and the House as well. Wednesday, we have nothing. Thursday, we have the FOMC meeting minutes at 2 p.m. Those become very, very important. We'll be looking at those closely. And Friday, we have a producer price index at 8:30. So all in all, if you take away the elections, it's not a busy week. You put the elections in, it's a massive week. So it's that important. All right. Iran sanctions, Iran. I know some people said it's not Iran. Where are you running from? I'm not running anywhere. I'm on my chair comfortably. Iran, I just pronounce stuff the way I want. All right. You want to correct it? Start your own YouTube channel and do it the way you want. Just kidding. But anywho, sanctions are in. It's official. All right. 8 countries have, including Turkey, Italy, India, Japan, and South Korea, have received temporary 6-month waivers, so they can continue to import Iran crude without being sanctioned, or the sanctions meaning that there's any kind of fallout as a result. All right. What could the United States really do if somebody doesn't follow the Iran sanctions that they've laid out? Well, they have control over the international money system with SWIFT. All right. They could take action that way. They could bar financial institutions from doing transactions with central banks and really accessing global liquidity. The advantage here is the U.S. is the reserve currency. So if they limit access to the dollars, that could be bearish for the U.S. dollar. And at the same time, it could cripple a lot of economies worldwide, globally, because they rely on the U.S. dollar. So there is more power here than you would assume. So Iran sanctions go into play officially today. 8 countries have a 6-month waiver, and I think that's taking the seriousness or pressure off of this for the time being. But it is official. Iran will start exporting less oil as of today because of these sanctions. And you can see oil's climbed up a little bit as a result. Oil's been down a lot for a very long time. We expect to see a rebound. And I've been expecting to see a rebound since around the 64 range, 64 to 66. We didn't get that. It just slid right through. All right. So it's a new day. It's a new opportunity. Iran in April exported 2.5 million barrels a day. Expectations for these sanctions are an immediate hit of 50%. All right. Which is what, 1.25 million barrels. The thing with that is Saudi Arabia could literally just sneeze 1.25 million barrels a day out. So Saudi Arabia has provided an agreement to Donald Trump verbally that they're going to boost production to help. The United States is selling oil out of their special drawing reserve, their SPDRs. They're on hold. They have them literally buried in the ground. The military, I think, has access to current oil needs in the United States for the next 10 years for underground storage. So there's enough oil, and the U.S. saying temporarily they might resort to that. So basically what I'm saying is sanctions are in. It's a little bit bullish for oil, but the market is well supplied. Demand is dropping. So this is, I don't want to say a non-event, but it's not as big because these 8 countries have got a waiver. All right, last but not least, here's a question that every trader is trying to answer right now. And I'm really going to do you no justice because I'm going to tell you I don't know. All right. And this is what you might be wondering for me is this a pullback? What we got last week? Is it a market rebound? Is it the start of a new rally upwards? Or is this a drop waiting to happen? Basically, should you be buying this dip or starting to sell rallies in a bear market? It's a transition point. And I will tell you this, I don't know. However, like I said, we're 9 years, 7 months, and 4 weeks into this bull market. At some point, we are going to get a 20% drop. It's if you've been trading less than 9 years, 7 months, you don't know what it feels like for the bottom to fall out. You haven't seen it yet. But the longer you haven't seen it, the more likely that becomes a possibility. All right, like a black swan. So I'd say prepare yourself for more volatility. I do think we end this year bullish. I do not think we hit new highs. I've been doing the research. I'm pretty confident we're not going to get to new highs by then in 2018, but I do think November, December, it gets to be a bullish market. Maybe we go and retest the previous all-time high. A key player that wasn't there in October is now back. You guys have to know this. This is huge. October 1st to the 14th, less than $5 billion. Wait, is that in millions? 5 billion, I believe. Let me just read this chart. Essentially, let's give it a 5 as just an index number, all right, on buybacks. Companies dialed back their buyback activity because they're blacked out. A company can't buy their own shares on the open market when they're reporting a quarterly report, right? So for the quarterly time period, one of the biggest buyers in the market, if you guys don't know this, has been companies themselves. They've been reducing their share float by a buyback, all right? That's one way to reward shareholders. That's a whole other side rant. I don't agree with it necessarily the way they've been doing it, but they've been soaking up. They've been the biggest buyer because they're out there buying their own shares with their company profits. They disappeared. These companies disappeared because they were doing quarterly earnings. Now they're back. All right, get this number. Damn it! I think I just deleted the chart. No, it's back. I got it. So through October, it was at a level of 5. Let's just call that an index level of 5. Now, November 5th, we're up to $140 billion of buyers coming back to purchase their own shares. That's going to provide support that we didn't have during the downside. Right? We sold off because we didn't have share buybacks. The market got nervous. October is a crappy month for equities statistically and historically, and from a seasonal perspective, we sold off. Now the question is this a new rally or is it an opportunity to sell? I can't answer that for you. I'll tell you this. Today's not the day to be deciding which way you should be repositioning your portfolio considering tomorrow's midterm elections. So what I will tell you is wait for the midterm elections to come out, the result to be known, wait for volatility to settle, then readjust your portfolio for the longer term. During that time frame, switch to shorter term and start trading it because you can really add cash flow to your overall portfolio by trading the opportunities. All right, guys, that's what I got for you. I hope you enjoyed today's morning market update. I want to wish you guys an awesome day. Watch oil. Oil is going to be a little volatile today because of Iran sanctions. Watch the equity markets. It is Monday after non-farm payrolls. That tends to be a little bit slower, tends to be a little bit more head fakey. But the place that we're at in terms of resistance, we could see a little bit more action than usual. So for the next 2 days, next 48 hours, it's not going to be an easy job to be a trader. I'll tell you this. Cut your risk, limit your exposure. If you haven't traded this as much, take quicker profits and take advantage of the opportunity, but don't get crazy. All right? Don't be a Hulk. Be more defensive, and through defense, score some goals. You guys have yourself a great day. I really appreciate you for coming out. Tomorrow, we're going to trade our midterm election starting at 7 p.m. with our elite team. I hope to see you guys there. Comes with a 14-day money-back guarantee. So if you just sign up, trade with the elite team, and you find that you're not liking what you're learning, you get a full refund. No questions asked. You don't want to be here. I don't want to hold you here. And so come out, meet the community. This is a perfect opportunity. I'll see you guys in there. Let me turn around and open the trading room. Got to talk about S&P 500 and all. All right, guys. Have a great day. Manage your risk, trade, TRADEPRO. All right, team. Thank you, Marky. Let's talk about the S&P 500. I'm going to give you guys a few good levels today that we could trade off of, and I'll set up the trades for you. Steven's back. He's going to talk about oil today. We're going to welcome Boxy back to his post, and we're going to have a great trading day. I still think there's opportunity today. I expect to be a little bit slower, but if you know your levels, you'll have some high probability, low risk trades. So let's jump into the levels and queue up some trades.